Good day, traders. Welcome to the first video of this week. Before we dive into the volatility that we experienced on Friday, let's have a quick look at the economic news that we can expect this week to see if there could be any events that could impact the price of Bitcoin and therefore the altcoins as well. As you can see, there's been quite a bit of European news, UK unemployment change, and so forth. But nothing really impacting the US. As you can see, you got Chinese CPI. Again, this is not really our thing that we're looking for. However, if we fast forward to, okay, got US Philly Fed, which is okay. Can be market impacting, but it's not like your CPI figures that are coming out. That being said, on the 24th next week, we do have US CPI figures coming in. Now, as you may be aware, inflation and employment figures are the two main factors that the Fed take into account when they're looking at interest rate decisions, right? And therefore, we want to keep a close eye on that. Just remember that you cannot increase or decrease, well, you cannot decrease interest rates if you've got very high inflation, because what it's going to do is add to that inflation. You want to try keep inflation down at certain target levels that tend to be around 2%, maybe 2.5%, around there. Anything higher than that, you probably won't have the Fed increasing or sorry, lowering interest rates because it will just spur on the inflation a little bit too much, as well as if there's high inflation, you're probably gonna reduce the potential for any quantitative easing, which can be done anyway. Uh, that being said, if we really go into the future, and I'm talking about, where is it? 10th of November, this US-China tariff deadline, it's going to be a number that people are looking at. As you recall, on Friday, we experienced some severe volatility, and that was triggered by the US-China tariff deadline. So if we look at TradingView at the moment, if we go into this volatility, let's just kind of take a step out here. Let's have a look at where are we in terms of, well, just the economy, right? You got the US, who has obscene amounts of debt at the moment in the trillions. You've got the S&P hitting all-time highs. You've still got interest rates being lowered. There's lots of things going on. You've got these tariffs and trade wars kicking off, and China produces a significant amount of the global products that we have all around the world. So when you start throwing tariffs around that involve China, it's going to be market impacting. Indeed, if you had to throw 100% uh, China tariffs around, you're going to absolutely get a massive reaction. Now, put that together with the amount of leverage in the market, specifically in cryptocurrency, and we have something like this. Now, to put this sell-off in perspective, they are looking at this as one of the worst flash crashes in Bitcoin history. Okay, and the reason being is because we're trading at such high levels at the moment. If we move, say, let's just see what this move was like. That was a 17% um, a sell-off on the futures market. Now, what happened? If you look at, let's have a look at just spot Bitcoin, right? We got down to about 109, yet on the futures market, we got down to 101. And the reason being is because even though the spot market, which is when you just buy physical, unleveraged Bitcoin that you can put in your wallet and just hold, you'll actually own it. Whereas with futures market, you put down a deposit and that allows you to take a position that of a higher amount than you would have otherwise. So in other words, you leveraged. If you're long and you start hitting these levels here, and let me show you. Let's say we're long over there, and just underneath you have all the liquidation amounts. So know when we hit a liquidation level, in order to get out of that position, you need to sell. So if we have leveraged long positions all the way down, and then we get liquidated yet to get out of that position, everyone needs to sell. And if everyone's selling at market at the same time, well, there's there's just not enough bids in the market to absorb it all. And therefore, you have this massive wick that goes down and gets bought up again. So this over here, this massive wick is going to be from leverage trades. And that is what would have hit drift. As you can see here, massive wicks coming down. And that's all. I mean, look at that. That is just, wow. I mean, you're looking there, that's a 50%, almost a 50% wick that happened in a couple of minutes. And that's from all the liquidations kicking off, right? So when we look at here, we have a scenario where everyone is, or at least everyone who's trading crypto, is looking for the top of the market. We're pointing up. We're looking to get all-time highs around this thing. So everyone's throwing on the leverage, thinking we're going to the moon, and then 100% tariffs get announced with China, sends down the S&P, and therefore drags down Bitcoin. That then capitulates because of the liquidations and then drags everything down with it. So you have one epic move. So where does that leave us, right? In times like this, and I'm going back when there have been market crashes in the back, the best thing to do is just to sit on the sidelines for now and take a broader picture. Where are we? What did that fundamentally do to the structure of the market? And if we go all the way out, you can see it actually does not change anything. We've still got this rising support. I mean, it pierced it a little bit, but this is on the this is on the futures market. Those were all liquidations. So I wouldn't really take this spike or this wick too seriously. At least not now. It was very serious on Friday, but it doesn't mean that we've changed direction. We haven't actually broken through this rising support. As we can see, we're now trading on this rising support here, and we're around this 1112 area. So these are very strong supports, and we are still due to have the top of the market kicking in round about these levels. So in the next couple of, well, week or so, we should theoretically be trading at higher levels. So I would say this is a good place to go long, but you need to be very careful with your leverage. All right. So again, let's just go dive into it a little bit. You can see we are now panning around these areas. We're on this buy zone. We've gone through, we're around testing these kind of levels here. And I would say this is a very good place to go long. Let's have a look to see what is our risk reward. I mean, okay, I would probably put in a stop round about here, about 108,500, about there, because the fact is that we could be poised to do a rather epic rally on the back of these levels. I know that the markets are scared at the moment. They have every right to be, but the best time to buy is usually when there's blood in the streets. And as soon as everyone's FOMOing in, as soon as your hairdresser is saying you need to buy Bitcoin because everyone's making so much money, that's normally a good idea to sell at that point, right? That's when you want to start taking your risk off and looking in the other direction. So let's just have a look at the others. Okay, let's go down to the 4 hour. Let's go have a look at the 4 hour chart over here. We're on now on drift. You can see massive wick down that started breaking through our previous levels. What I've done is I've kind of created a little bit of a pitchfork here just to see where we are. As you can see, we found support, at least on the futures market, around about these lows. So it kind of looks like we're trading. We made this this triangle, broke above it, came back, retest of this resistance turn support, and we were meant to keep on going like that. But we broke through it. That's okay. Because if we put this pitchfork, and if you've never used pitchforks before, you kind of do it like this. There's your pitchfork over here. You go on the middle one. You then take the top of that there, and then you bring it down until everything's parallel. boom, and then you'll see it probably bounce a little bit there. So this could be a potential path going up. Either way, we don't expect this to drop further than these wicks over here, right? And the upside could be quite significant because we've now got rid of many of the long leveraged positions, which means that traders need to go back into those positions in order to benefit from the rally in Bitcoin. And if they're going back into it, they're buying. If they're buying, it's going up, right? So we basically released through the capitulation, we have released loads of the bids or the people buying in the market, and therefore they have to pile in. And when they pile in, that obviously puts the markets up. So I'm still looking quite bullish at this point in time. I don't think that we've hit the top of the market in yet. I think we're going to, and I think we might get a surprise to the upside. But as I mentioned in when we're looking at the trade talks that's coming up, or the trade deadlines on the 10th of November, there will be um, Trump tweeting that Xi Jinping and him they've had fantastic agreement, and then what you're going to do is you're going to have something that will look similar to this, right? It'll just go boom, 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 or you're going to have something that will look. There we go. We're going back onto Bitcoin here. Uh, if they come out saying, "Oh, do you know what? Xi Jinping um, and Donald Trump, they managed to kiss and make up, and everyone's happy," and you can have something that just looks like that, right? But then again, you're going to have that spike. Anything that goes up that quickly will probably be a spike. It'll then come down very quickly, and then that'll be a massive wick, and then we can start descending, right? But my point is that between here, let me have a look. Just okay, so the 10th of November, which puts us very much in the middle of our timing band to go short. Well, we should get the low of the market, right? So I would expect, and yes, just an example, or very speculative, I would see something like good news coming out. Everyone, the fear factor kind of dies out a little bit. We get a little bit of a pop just above these levels, up to about 132, 145, somewhere like that. And then, people start losing hope a little bit. Boom, boom, boom. And then when we're meant to have the trade talks kind of maybe they fail or not, but we could get some kind of a big move going into the 10th of November. You see, what's going to happen is as time goes by, as we run out of time going into the 10th of November when with the deadline of the trade talks, it will likely go down to the wire and people will get more and more uncertain as to what's going to happen. You see, the markets can handle good news because they know it's going up. They can handle bad news because we just go short or we can hedge ourselves or we can manage our risk. But the markets cannot handle uncertainty. It then factors in worst case scenario and some because it doesn't know how to hedge against uh, that uncertainty. How do you hedge against an unknown? And so as the unknown kind of builds up, that's when we could have some sell-off going into this timing band, which will be around about the 10th of November. But I am expecting a little bit of a pop-up from these levels to all-time highs when Trump starts saying that China and the United States are friends again, and then after that we'll get a little bit of a drawdown. Complete speculation, but it ties in well with this. I mean, either way, we are still trading broadly sideways. Ethereum had quite a thing over here. I'm a little bit concerned with Ethereum, to be fair, because you kind of going across here. Money should start flowing from Bitcoin into Ethereum, and we should start trading higher at this point. I would expect we should, when Bitcoin pops up to its should be its all-time highs in the next week or so, uh, when they take profit, that should flow into Ethereum, so we could get something off these levels like that. Okay, but just remember when everything flows from Bitcoin into Ethereum, it will do so very, very quickly, far quicker than it takes for funds to go into Bitcoin to create the rally that we've seen in the last 2 years, right? So you'll have almost like this huge rally, and then that'll stem the end of the bull run, and then we'll start going down. Either way, it's time to be very diligent in terms of these big market moves. If you don't follow Trump, now's probably a good time to do that on Twitter because that's going to make these markets move in terms of trade talks and whatnot. But I think at these levels, we have a very good risk reward. I think if you want to get along some of your favorite projects, now would be a good time to do it. I think maybe you should go in with very, very low leverage. I mean, if you want to use leverage at all, I'd say it's a good time to trade spots. But if we're looking over here, I mean, I would put a stop underneath 130 over there. Now, let's say if we went down to 130, and that's a 30% drop. That means that you will get liquidated if you are on like 2 or 3 times leverage. It's almost not worth it, right? So I would say at these levels, when you're looking at altcoins with this amount of volatility, maybe it's best to stay away from leverage at this point. And if you're going to use leverage, be very, 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 very careful on it. And that traders, good luck for the week. Keep an eye out on tweets from Trump. And I would say these are good levels to go into. But again, a lot of uncertainty, a lot of fear out there. And so just trade safe. All the best.